You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 12/20/21. Well, we have a live studio guest with us, even though this is a recording that you're hearing. Chris Vermeulen, thetechnicaltraders.com, is with us now live in the studio. Chris, it's great to have you here. You are our first live guest since we moved.
Yeah, well, thanks for having me, Kerry. This is awesome.
So we're seeing all sorts of crazy gyrations in the motion in the markets. We got the news from Powell last week, steady as she goes. Everything is fine. Don't worry about inflation. It's here to stay, but don't worry about it, basically, right?
Yeah, exactly. Yeah.
So what effect first on gold and silver? It went up a bit right after he appeared, and then it kind of faded.
Yeah, I mean, there was quite an interesting move. I mean, we saw gold really pop and take off. We saw miners, silver. I think because he's talking about inflation is really here to kind of stay for a while, and he's worried that it could get higher. And of course, gold is a good play for inflation. So we saw that take off, but it was short lived. I mean, I listened to the Fed meeting there, and it was a very positive talk. Everything he said was they're prepared for everything, and they don't see anything out of the norm, and unemployment's at a good level. It's a booming, super strong economy, and of course everybody was excited and bought into it. Created this huge rally. I think there's a lot of short covering going on in there. There was one thing that I thought really stood out, which was he started to go in talking about a cyber attack on the financial industry. And I don't know if that's like foreshadowing of something they know that's brewing, but I haven't heard them really talk about it. And I found it interesting that they're talking about a cyber attack on the financial markets as the only thing they're not prepared for. And be interesting to see what unfolds in the future.
You can only imagine what that would be like. And these banks are vulnerable. A lot of them are using legacy systems and written in COBOL before there was an absolute obsession with security and hackers. I mean, if you've ever watched any of the hackers on YouTube, there's one called Scammer Payback, and, they hack in, they get people to do things, social engineering. We're really ill prepared, as we saw with the pipeline being shut down in the U.S., gas stations running out of gas. So they paid a ransomware ransom, several $1 million. And we've seen this repeated over and over again. So to think that it can happen in the financial sector, really naive.
Yeah, for sure. I think the more technology is more brittle and insecure, or it's not so secure as we think. And it concerns me. And there's actually a sector ETF out there called Hack, and it's all for cybersecurity. I think there will be a time when we see cybersecurity go through the roof. There'll be some big breach that it will be in a bank system or the financial system, and really cripple things, because they're going to have to shut down credit cards and all kinds of stuff if it was to happen. So I think we haven't really seen that sector explode, and we haven't had a huge crisis. We always hear about hacks here and there, and different networks and stuff, but never anything that's huge global in the financial sector. So the door's open for an opportunity when it does happen.
Hey, all we need is one big bank. So you probably wouldn't be able to shut down the credit cards and the deposits and different operations, because they're all on different systems and they're all housed in different areas. That would be difficult. Not impossible. Maybe you could block their IP access. Who knows? But if you shut down a major bank's repo operation, or that a major bank, none of their depositors can get to their funds, and none of them, their ATMs stop working, and none of the wires come and go from the institution, that could have profound effects
for sure
on the global system, and could lead to a major crash overnight. I mean, it's speculative, but certainly it's not far from reality.
Oh, for sure. I mean, if you were to close big transactions or something down in the United States, I mean, it's a global world. It would cripple the whole world. And you never know. They could do what they did back when there was the financial crisis. I mean, they put a cap. Everyone in Europe was like $100 €100 a day limit, right?
Yeah.
So if things are out of control, they're going to at least limit things. But I mean, this is very speculative. I just found it interesting that they brought up, and he kind of went on a little bit about this whole cyber attack on the financial markets. And it seems weird.
Hey, shut down a major brokerage house. That's actually more devastating than a bank, because banks have got disaster systems in place so they can pretend to be carrying on business normally, even though they're not. Banks have gotten hit, they've been shut down, but they still keep going. Shut down a major brokerage house, which is now a bank, let's face it. All the banks are the brokers, part of the problem. So you shut down a major broker, and it doesn't even have to be a retail broker. It could be a market maker, like a Citadel. You shut one of them down and the whole market goes, it'll be like 9/11 basically.
When there's no liquidity.
It's gone. And then they don't even know how to fix it. It's going to take time, could take a while, even though you got to believe that certain companies are probably at the height of security, and that's one of them, as much as it can be. But for every system, there's a vulnerability. We know that. So
if that was to happen, though, it would be the perfect storm for cryptos and for metals. Think if you had physical metals. I mean, that's not like something digital. It can be hacked.
That's the whole problem.
Yeah.
Yeah. So speaking of metals, so we're at this like kind of inflection point here. How much longer are we going to go back and forth over $1,800?
Yeah, I mean, gold's really the whole precious metal sector has been out of favor for a year, and it's just still kind of in a major downtrend. It's trying to find a bottom. Gold is testing at a major support level. I think gold is and the metals and miners for that matter are all putting in a major bottom. We saw a nice bounce off gold. There's some life coming back into the market with the FOMC meeting. Gold miners put in a really nice reversal candle. They gapped sharply lower. They sold off and crashed, and then they reversed and rallied up near the highs by the closing bell. And then the next day was a huge move to the upside again. And those are usually really good standout lows in the market. So I think most of the downside in precious metals is gone. I think right now they're trying to build a base. They're kind of just testing these lows. I don't really think they're going to go much lower. They might poke nominally lower, but nothing significant. And I think their time is going to be to shine here in the next couple of months because I think we're in the late stages of a stock market top. We're getting very close. And this is when the precious metals and the miners become a defensive play and start to come to life and outperform the rest of the sectors.
So when we talk about volatility in markets, oil and natural gas have been the very definition of it over the past year, with oil trading at negative rates, negative prices, and then bouncing back to $75 and then pulling back. What's your take on oil and then nat gas?
Don't just survive, thrive. The Financial Survival Network.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, well, oil's in a longer term uptrend still, but recently it broke to the downside. The Omicron definitely took the wind out of the sails. It created a sharp drop, a huge gap, did some technical damage. And so now it's back into a short-term downtrend. It is breaking down, as you and I are talking today, about 3% or so. And, it's trying to base and find a bottom. I think we're going to probably see oil do fairly well. I think it's going to hold up and get some traction as long as this Omicron doesn't continue to stretch things too far. And this is the problem. We've got so many things coming into play over the last couple of trading sessions. We've got the Omicron. One day it's the worst one yet. The next day it's nothing but one day cold or flu. And so investors and traders are in and out of this market with waves of fear and panic. And then, of course, we had one of the highest put call ratio days a couple weeks ago. And everyone was buying put options. And so there's a huge put position on the market, meaning people are betting on a falling market. And Friday we had triple witching. And that means we got futures and commodities, everything expiring, all the options. And we've had 7 options triple witching days closed negative. And that was another one. And so today you and I are speaking, the markets are down sharply again, because I think there's carryover fear from Friday's kind of bloodbath. But I think this market might be actually changing gears here. I mean, we're close. We're about a day away from potentially exiting the stock market, looking to move into a new position. And we're going to know by the end of today or the next session or two what we're going to do and where we're going, because the market here is shifting for sure.
Any sectors of the market you think will be safe if we're heading for a downturn?
I think bonds could hold up fairly well. I think precious metals are very close to maybe showing some signs of life and coming back. I think bonds would be a more imminent type of play. The US dollar is probably going to be a good play. It's holding up exceptionally well. It has a strong bull flag pattern. It's ready to pop and run. And if the stock market does roll over here, we're going to have another wave of fear. And when there's fear, we see people move to the US dollar and it drives it up. And that'll delay the move in metals, I feel, a little bit, and kind of mute the strength that metals have. But so to me, it's the dollar and bonds are potentially the next play here if this market confirms a breakdown.
Interesting. Well, one thing we do know is that whatever the market does, it will frustrate the majority of the participants, right?
Oh, for sure. Yeah.
That much we know for sure. So inflation, I mean, indirectly, you follow it directly. What's your take on it? How long is this inflationary spiral going to last?
Yeah. None of us like it. Everything has gone up in price. It's tough to buy and get anything you want. We got this whole supply chain issue. I think it's here for a lot longer than we want. I'd love to see it start to come down in a year and a half from now, but I think that's wishful thinking. The wheels in motion here are so big and there's such a delay in things that this could carry out for 2, 3, maybe even 4 years. So it could be a painful run where everything's overpriced and really expensive, and hopefully we'll see things fade back down over the next few years in price versus stay at this level. So
with this inflation, there are 2 components to it, obviously. Number one is we've created zillions of new currency units around the world, not just the United States. I'm sure China's done 5 times more than the U.S. has, for sure. So we've got like a lot more money. And then the supply chain, which consists of backlogs of orders that took place during the pandemic, because we basically were paying people not to produce, which is one of the things of capitalism that is really makes it non-capitalistic. When you pay people not to do things, rather than paying them to do things, even if they're bad things, even if they're things you don't want, when you subsidize idleness, you subsidize non-productiveness, that becomes a way of life. It becomes a lifestyle, doesn't it?
They say it takes a month to create a habit, and we're going on over a year here of getting free money and making life fairly easy, not fairly easy, but helping people, put it that way. So we've created a habit, and a lot of people don't want to work. I mean, I have friends who have businesses. They hired 2 people one time, and they were both supposed to start on the same day. Neither of them showed up, and then would never answer their calls again. It's just unbelievable how people won't work. As soon as they do get a job, they don't like it, they don't come back, and that's it.
Hey, well, the former governor of Massachusetts, William Weld, before he became kind of a wacko that he has now, once said that the welfare state, the safety net should be a net, not a hammock. And it's turned into a hammock. And there's a lot of people who rather lie in that hammock and watch the day go by than work. Obviously, you and I are not into that. Work ethic, bred with work ethic. But the work ethic in the West has been dying a slow, simmering death for decades. And just maybe we're going to see the end result. And then people will once again understand that contrary to Jerome Powell's assertions, money really doesn't grow on trees.
For sure. It'll catch up to whenever you cut a corner. Nothing in life is free. If you got an easy life right now and you're getting funding and you don't want to work, I mean, you might as well enjoy it, because when it comes to an end, though, it's going to be rough. You're going to be behind. It's way better to make more money and actually do something you're happy about and you enjoy, and help the economy get going than to kind of be a drag on it. So it'll come back, and unfortunately, it's going to affect everyone in the end. There's going to be a lot of people burning through their savings. I know a lot of them are, and a lot of people are selling their homes because they're really high priced. But then they go and they're renting, and the rent is more than their mortgage, than their mortgage was on the house that they sold. And they don't realize this. A lot of people just don't think of what they're doing and the situation we're in. And it's tough because people are just trying to liquidate and kind of ride the coattails. But it's going to have a really bad backlash down the road.
I was talking to somebody just yesterday in Florida. Their rent on a medium-sized 2-bedroom apartment in West Palm Beach, I believe, went from $2,500 to $3,500. One increase. I mean, that is 40%.
Yeah.
But we've only got 6% unemployment, but producer price is 9.8% or 9.6%. And at least the producer price index isn't all hedonically adjusted like the CPI. But today's producer prices are tomorrow's consumer prices. Yeah. So there's no getting away from this, and it's going to be with us for a lot longer. I mean, when you look at real rates, if you believe Williams, shadowstats.com, the actual inflation rate, the way it used to be calculated in the United States, the CPI, 14%, a 30-year fixed mortgage, 3%. So where else can you go in the world and have a minus 11% real rate of interest? It just doesn't exist. And yet here we are.
Yeah, it's scary. I mean, all the numbers are changed, calculations are changed, formulas, it's like a giant cover up. Things are worse than they look, but everybody's out of inventory and jacking the prices up, and we're booming right now. So that's the crack up boom. Yeah. We'll conclude with President Dwight D. Eisenhower's observation that things are more like they are now than they've ever been before. Yeah.
Hey, Chris, just tell us where we find you, how we subscribe.
Sure. Well, you can find me at thetechnicaltraders.com. Every morning I do a video. I recap what's going on in the markets from a short-term perspective for what's going to happen today, tomorrow. I look at kind of a swing trading view over the next couple of days to weeks. And then we look at the big picture every week as well to see what the major trends are at play. And I trade sector ETFs and indexes and bonds and commodities. And I share all those trades with followers. So it's a pretty educational process, and you get some trading in there as well.
All right. Hey, and you can use the link in the show notes to this interview on financialsurvivalnetwork.com. If you got a question for Chris, shoot me an email to kl@kerrylutz.com. We'll get you an answer. Don't forget, subscribe to your free newsletter. Chris, pleasure having you here live. We'll talk to you again soon.
Yeah, thanks for having me, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.